Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil.
Paris rapeseed. The market's recent rise started in August from the support of the slowly rising long moving average, currently at 475 even, and the 50% absolute Fibonacci line at 445.5. This move higher did not happen all at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern with a fairly flat neckline, currently at 477 even. 8 weeks ago, prices broke higher over this neckline as well as over the medium moving average, currently 487 3/4, stabilizing over both of these for about a week before moving higher. 7 weeks ago, I laid out potential primary and secondary topside targets, and these were soon reached in mid-October. Prior to this happening, I also said about seven weeks ago, and I quote, "There is one other feature I would like to highlight, though at this time I'm not sure if it is very relevant, so it's more like a just be aware type situation. It's the construction of a possible mid-August to date rising expanding wedge pattern. I've not highlighted it in my daily chart, as I'm not sure of the weighting I should give it, but it is something just to be aware." End of quote. Now I should also further add that 6 weeks ago I said the following on this pattern as well, and I quote, "There's also now the possibility that this expanding wedge pattern may be morphing into a late September to date quite acute bull channel." End of quote. Oh sorry, this development is one to watch. End of quote. Well, I have since highlighted this bull channel and finessed it even today, and it's currently 421 3/4 to 449 1/4. And I do believe it has shown the bullish incentive here. However, the purple lower bull channel line was being tested as I was composing this commentary, and it's just been broken through on the downside. Now, with prices most probably peaking, seeing there a peak at the March 23 high at 540.30. The drop 540 3/4. The drop this week, including the gap midweek, is already set up to make a possible weekly key reversal. Thus, if we close on Friday night either over 534 3/4 or under 533 1/4, then we'll be on. Now this is quite a narrow range for a potential weekly key reversal. The outside of it, the closing inside it. But if we close within that range, then we'll have the lesser outside weak pattern. Now right now we are most definitely looking at a weekly key reversal down. Now prices turning low have almost immediately run into congestion between 513 3/4 to 519 1/2, and this stretches back to September 2012, along with a more recent high in July, as well as a somewhat dubious neckline of the June to October 2023 move, which is currently 515 3/4. This all raises a question on any ambitious targets below for any proposed break lower from the purple bull channel. However, if we do head further lower, then support, and we are looking at the moment, we've just dipped below it again. Further support comes in varying degrees at 504 1/2 and 497 1/2, as well as the rising short medium moving average currently at 500 1/2. Though this rising short medium moving average has been better as a cap on prices in the recent past rather than a support, but the pressure is very much on the downside, and I'm not going to do it now because we haven't closed below that bull channel, but next week I'm going to look on the downside for targets if we haven't already reached them. Winnipeg canola. During very recent times, the moving averages here had acted as a support, as a resistance, and also as a nuisance. Over the last 3 weeks, the market has utilized the very slowly rising gold long moving average, currently 629, as a support, whilst also being within the supportive sphere of influence of the rising mauve medium moving average, currently at 623.30, and to a lesser extent, the green short medium moving average, currently 624. These last two can't seem to make up their mind if they're going to form a golden cross, which is a lagging indicator, or not. These are not the only features. You see, 6 weeks ago I said, and I quote, the activity over late July today has also created a quite lopsided double bottom pattern. And last week we were trying to break above the neckline, which approximately equates to the 2021 low at 629.60. Now, as I said last week, so that is now 7 weeks ago, and I quote, I'd normally wait a little for a confirmation for this move higher, but I'm tempted with what I've seen in the other markets to lay out some potential targets topside right now. That's the primary target X would be in the 671.80 area, with a secondary hard to reach target X1 up in the 688.10 area. These, of course, presupposes that what I see right now is not a double, as a double bottom pattern, does not in due course become a bearish cat's ears pattern. End of quote. Well, since then, not only have I chosen to stick with this idea of a double bottom, but to develop it further and possibly enhance it by looking at the whole August to date actions of possible reverse head and shoulders bottom, with a highlighted dark blue neckline currently at 664.60, which interestingly has capped the market since late April despite a number of breaches and piercings. Now, as I said last week, and I quote, it is waiting in the wings should the dark blue neckline be broken, properly broken on the way up towards target X and X1, at which time I will likely lay out fresh targets for this new, currently potentially reverse head and shoulders pattern, end of quote. This week we have come closer still to both those targets, yet we still have not triggered the pattern and don't look like we're going to do it. I'm minded now to retire both target X at 671.80 and target X1 at 688.10. This was as I was writing my notes for this at the beginning, and if we close anywhere where we are now, then I most probably will. And these are the primary and secondary targets of the original August to September double bottom pattern, as we've just been taking too long. I'll leave them on for one particular opportunity. Now, there's one final thought, and when I started to organise this commentary, it was close to becoming a reality, and just now it has become one. The peak in the market on Monday and the subsequent fall for the rest of the week have set up the conditions for this week to become a weekly key reversal. So if tomorrow, so that's Friday, if we close either over 665.10 or under 660.80, it would be on. Anything in between with a lesser outside day. Right now, we are looking at a weekly key reversal down right at the top of the market for the last few days. We're below not only the 2021 low, we're below the gold long moving average, the mauve medium moving average, the green short moving average. If we close down here, then the next opportunity on the downside is May 2023 low, and potentially all the way down to the neckline extension of the April and June 2023 reverse head and shoulders continuation pattern. Now, if we do get down to those sort of levels, we maybe start looking now then at a monthly key reversal down, which would be quite an interesting situation. And the reverse head and shoulders pattern will not be a standard reverse head and shoulders head and pattern, but a reverse head and shoulders continuation pattern higher. A reverse head and shoulders continuation pattern heading lower, because we'd come into it on the downside, even though the neckline is pointing up and then coming back down again. So very interesting. Bursa Malaysia crude palm oil. I said 7 weeks ago, and I quote, of all the oilseeds and veg oils, palm oil has become the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April. Okay, so the first of these, and that's the end of the quote. Okay, so the first of these patterns is the broken upper time, currently at 36.86 of the August to November 2022 bearish shift pitch hawk. I know this is way down, way below, well below the current market, but the upper time had acted as a declining support throughout late spring and summer. The second pattern is a neckline currently at 43.09 of the September to November 2023 reverse head and shoulders pattern. This is also way down below the market, not as far as the previous one, but it is important still. Finally, I'd also possibly add the neckline currently at 43.93 of the September 2015 to November 2017 head and shoulders top, though I'm really not sure about this one. This also is way below the current market, but it is significant, as are all three of these. Anyway, in early October, the market broke up over the lower September to November 2023 reverse head and shoulders neckline and became somewhat capped by that next neckline above, the one from September 2015 to November 2017. This bracketing of the market between the two necklines happened throughout most of October and eventually led to the formation of a mid-September to early November bullish halfway hesitation, which saw its topside targets reached 2 weeks ago. Now, prices next started testing a pair of 50% Fibonacci lines overhead, one from the July 2019 to March 22 move at 49.64 and one from the May 2020 to March 22 move at 49.92. And 2 weeks ago, late 2 weeks ago, the market seemingly broke free on the top side from both of these. Prices then last week pushed up over one of the June highs for 2022 at 51.17, but failed to sustain the move, with the next resistance being a changeover gap between 53.20 to 54.18, also from June 2022, and then the big 50% Fibonacci line, the January 21 to March 22 move at 56.06. That's quite a way up, that one. So, prices pulled back down to that pair of 50% Fibonacci lines at 49.64 and 49.92, where they hesitated for a bit before today dropping down and filling in the October to November changeover gap at 47.43 to 47.90. The market also pierced but did not close below the mid-September to date uptrend. Admittedly, based itself on a gap, but there you are, on the downside it was based on the gap, creating a possible hammer pattern today, usually seen as a bullish pattern, though maybe not so in this case given the subsequent action, but we shall see. Yes, at this point I would like to raise a big final point, a point I've been stressing now for 35 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now?" Well, for this I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 22 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. To watch to see if prices reach up to, the 44.08 area, and then what prices do at that level. End of quote. I added only as recently as 6 weeks ago the following to that, and I quote, "It seems obvious to me at least that I should still consider monitoring this 44.08 level. Not only because it is a longer term play, but also to see if its influence could be felt in the very recent action we have seen this week and possibly in weeks to come. We're now closer to it than we have been since early April." End of quote. We are now well over the 44.08 level, but we are also now closer to 44.08 than at any time over the last 2 weeks. Nevertheless, last week I started analysing the longer term patterns to ascertain what the opportunities may be. Now, please note, we have only had a single month's close over 44.08, and that was the October this year. And what I'm talking about is a very long-term pattern. Ideally, I'd like another consecutive month, and it's a very hesitant on my part, but I will try to give a preliminary idea for what we may have as an initial opportunity topside, but only should we have confirmation of the move above 44.08. Okay, so what am I talking about? What I'm talking about would be above the high on my daily chart, way up in the 5600 area. This would tie in with the really big and important 50% Fibonacci line of the January 21 to March 22 move up at 56.06. Now, I should point out that on a monthly chart, we are looking right now at a possible indecisive doji cross for the month of November. But with still a week and a bit of the month to go, just be aware of these things as we go forward. We are not there yet.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.